Let me ask you something. If you stopped working today, how long would your money last? A week? A month? Maybe not even that. Because here's the reality in 2026. Working for money is no longer enough. If your money isn't working for you, you will always be behind, and that's not your fault. Most people in the US were never taught how to invest. They were told to work hard, save money, and hope things work out. But saving alone doesn't build wealth anymore. Inflation eats your savings, prices keep rising, and the gap between people who invest and people who don't, it keeps getting wider. But here's the good news. You don't need to be rich to start investing. You don't need thousands of dollars, and you definitely don't need to be a financial expert. You just need a simple system. In this video, I'm going to walk you through exactly how to start investing in the US as a beginner, where to invest your first $100, $500, or $1,000. The biggest mistakes to avoid in 2026, and how to build real wealth step by step. No complicated terms, no hype, just a clear, beginner-friendly roadmap. Let's get into it. Section 1, what investing actually means. Simple explanation. Let's keep this simple. Investing means putting your money into something that has the potential to grow over time. That's it. Instead of your money just sitting in a bank, you're putting it to work. Example, you invest $1,000. Over time, it grows to $1,200, $1,500, $2,000. Not overnight, but over time. Why this matters in 2026? Because inflation is real. If your money is just sitting in a checking account, it's actually losing value slowly, quietly, every year. Investing is how you fight that. Section 2, the 3 main types of investing, beginner friendly. Before you invest anything, you need to understand the basics. There are 3 main ways people invest in the US. 1, stock market, most popular. This is where most beginners start. When you buy a stock, you're buying a small piece of a company. Example, if you buy shares of a company like Apple and the company grows, your investment grows. 2, index funds, best for beginners. This is where it gets easier. Instead of picking one company, you invest in a group of companies. For example, an index fund might track the top 500 companies in the US, so instead of betting on one company, you're investing in the whole market. Less risk, more stability. 3, real estate, long-term strategy, buying property and renting it out, or holding it as it increases in value. This usually requires more money, so most beginners start with stocks first. Section 3, why most beginners lose money and how to avoid it. This is important because investing is simple, but people make it complicated. Mistake 1, trying to get rich. Quick buying random stocks, following hype, chasing trends. This is how people lose money. Mistake 2, not understanding what they're buying. If you don't understand it, don't invest in it. Simple rule. Mistake 3, panic selling market goes down. People panic. They sell at a loss. Then the market goes back up and they miss it. The truth, the market goes up and down. That's normal. Long-term investors win, short-term gamblers lose. Section 4, how much money do you actually need to start? This is where most people get stuck. They think, I need a lot of money to invest. That's not true anymore. You can start with $10, $50, $100. Many apps in the US allow fractional shares, automatic investing, no minimum balance. The real rule, start small, but start early because time matters more than money. Example, someone who invests $200 per month for 10 years will beat someone who waits 5 years to start. Time is your biggest advantage. Section 5, where to start. Step-by-step setup. Let's make this practical. Here's how to start in the US. Step 1, choose a brokerage account. This is where you invest your money. Popular options include beginner-friendly apps, long-term investing platforms, retirement-focused accounts. Step 2, Link your bank account, transfer money easily. Step 3, deposit your first amount, start small. Even $100 is enough. Step 4, buy your first investment for beginners. Index funds are the safest starting point. Step 5, set automatic investing every week or month. Let the system grow your money. Section 6, the beginner strategy, simple and powerful. If you're starting in 2026, here's a simple strategy. 70 to 80% to index funds, 20 to 30% to individual stocks. Optional. Keep it simple. Don't overcomplicate. Consistency beats complexity. Section 7, what to expect in the first year. Let's be real. You won't get rich in 3 months. Year 1, you learn, you build habits, you see small growth. Year 3 to 5, you see real results. Year 10 plus, this is where wealth builds. Section 8, what should you actually invest in? Simple breakdown. Now let's answer the biggest question. You've opened your account. You've added money. Now what? What should you actually buy? Option 1, index funds, best starting point. If you're a beginner, this is where you start. Index funds track the overall market. That means instead of guessing which company will win, you invest in all of them. Why this works low risk compared to single stocks? Long-term growth. No constant monitoring needed. Simple example. You invest in a fund that tracks the top 500 US companies. If the US economy grows, your money grows. Option 2, ETFs, flexible and beginner friendly. ETFs are similar to index funds, but you can buy and sell them like stocks. They're simple, low cost, and widely used in the US. Option 3, individual stocks, optional. This is where things get risky. You're picking specific companies. Some will go up, some will go down. Beginner rule. If you're starting, keep most of your money in index funds. Use a small portion for stocks if you want to learn. Section 9, a simple beginner portfolio, 2026 strategy. Let's make this very practical. If you had $1,000 today, here's a simple setup. $700 to index fund, market-based, $200 to growth ETF, or tech-focused fund, $100 to individual stock, optional learning. If you want zero risk stress, just put 100% into index funds. That's completely fine. Section 10, the power of consistency, dollar cost averaging. Here's a strategy used by smart investors. Dollar cost averaging. What it means, you invest the same amount of money at regular intervals. Example, $200 every month. Why it works. You don't try to time the market. You don't stress about ups and downs. You just keep investing. Over time, your average cost balances out and your money grows. Section 11, how to grow $1,000. Realistic example. Let's keep this real. You start with $1,000, you add $200 per month. Assume average return approximately 7% per year. After 1 year, around $3,500 plus after 5 years, around $15,000 plus after 10 years, $35,000 plus. This is not hype. This is how investing works over time. Section 12, retirement accounts. Very important in the US. Now let's talk about something powerful, retirement investing, 401k. If your employer offers a match, take it. That's free money. 2, Roth IRA, you invest after tax money, but your growth is tax-free. Long-term, very powerful. Simple rule, if you have access, use these accounts. They're built to help you grow wealth faster. Section 13, risk management. Protect your money. Let's talk about safety, because making money is important, but protecting it is more important. Rules to follow. Don't invest money you need soon. Don't go all in on one stock. Stay diversified. Think long-term reality. Check markets will go down sometimes. That's normal. The mistake is reacting emotionally. Section 14, what not to do in 2026. Avoid these mistakes. Following random TikTok stock tips. Trying to flip stocks quickly. Investing money you can't afford to lose. Checking your portfolio every hour. Panic selling. The truth, investing is boring. And that's a good thing because boring makes money long term. Section 15. When will you see results? Let's be honest, not instantly. First 3 months. You won't feel much. First year, you see small growth. 5+ years. This is where real wealth builds. Key idea, time in the market greater than timing the market. Section 16, the simple 2026 investing plan. If you want a clear plan, follow this. Open account. Start with $100 to $1,000. Invest in index fund. Add money monthly. Ignore short-term noise. Stay consistent. That's it. No complexity needed. Thanks for watching. Don't forget and subscribe. Tell me in the comments what I should do with the next video. Thank you.